gold's flying. And I had looked at gold on the open a few minutes after the open. It wasn't really doing much. It was up $2. Then I turned it on my account and looked 21.30, and I thought, wow. and then another friend called me, and I told him, don't get too excited, try to stay level-headed. And then this morning I wasn't surprised that it was back down to around 2070, which was the all-time high from 2020. And also we closed last week at 2072. Yes, it's a good thing for stackers when the price of gold and silver go up in dollars. But the other way we need to look at it in the long term is that the dollar is going down versus a gold and silver in the long term.
In a stunning turn of events, the gold market experienced a surge to record intraday highs, surpassing the $2,100 mark and peaking around $2,150. Mario Innecco, financial analyst and voice behind the Manco 64 YouTube channel, contextualized this breakout, emphasizing its positive implications for gold and silver stackers while cautioning a long-term view that underscores the weakening dollar. However, this surge was not without its share of volatility, attributed to the breaking of crucial technical levels and the subsequent covering of paper shorts, resulting in a roller coaster ride for investors. Despite this short-term turbulence, Mario advises physical gold investors to maintain a balanced perspective, highlighting gold's historical stability over fleeting market fluctuations. As the market absorbs these developments, the gold surge remains a focal point, offering both challenges and opportunities for investors navigating these dynamic financial waters. Now we'll show you clips of Mario, but first, subscribe, and turn on notifications so you are tuned without financial experts that will help you navigate the commodities world. Also, check our pinned comment for some massive sign-up bonuses. Enjoy the video.
Very key technical levels from the last almost 4 years, that 2050, 2070. And then last night, my time or afternoon your time, someone came in and covered probably a lot of paper shorts, and that took the market way up to just below 2150. Yeah, and it's like a line in the sand. Usually that kind of volatility happens when you break such key levels. We had like a triple top there, and we broke through there. A lot of energy, and that's why that happened. But in terms of the volatility in the last 24 hours, yes, it has been volatile. But I looked at someone put out a report. It's based on the last 5 years, and they've got something called the Sharpe ratio, which measures volatility and return of an investment. And gold is third on the list. It's been the least volatile and the best returns in terms of the Sharpe ratio. So it's actually a very, very stable, if you want to call it, investment. I think the top two were like a long and short hedge fund portfolios, or stuff that was really hedged. And Bitcoin, for example, the Sharpe ratio on the ranking, they were way down where compared to gold, even though they have done well. So that's what I would say. And the other thing that I always think, because I've been looking at the gold market since 2002 when I started buying gold, and I could tell right away that there's something fishy, in the paper market. And but what I tell people is, what's the other option? Do you want to get rid of your gold and put it with the banks as fiat currency? It's not even legally yours. It's an unsecured loan. And the other thing is, well, do you really want to have a lot of money in the bank right now? I don't think so after what happened in March. And we know the latest FDIC numbers weren't very good. The unrealized losses on securities, it's approaching 700 billion. That's how, whenever I get a little bit annoyed about these moves, I always think, what's the alternative? And to me, there isn't. And the other one is, do you want to finance the current administration in the U.S. or the current administration here in the U.K., where they let in 745,000 net, illegal immigrants or migrants in 1 year, which is over, 1% of the population. So that's the other way to look at it. By keeping fiat currency in the bank, you're financing all these things.
In November 2023, the Global Gold Exchange Traded Fund, ETF arena, witnessed a discernible shift as outflows notably contracted, reflecting altered investor sentiment. This report meticulously dissects gold holdings and flows in USD across various regions and funds within the ETF sphere, pivotal instruments for both institutional and individual investors. Published on December 6, 2023, the analysis illuminates that geopolitical uncertainties and strategic positioning fueled a surge in gold prices, instigating a perceptible trend reversal in the United States. Despite a year-to-date decline of 7% in global gold ETF holdings, the sector experienced a 5% boost in total assets under management, AUM, propelled by an upswing in gold prices. November specifics unveil a measured outflow of $920 million from physically backed gold ETFs globally, notably narrower than the previous month, alongside a 2% AUM rise to $212 billion. Regional dynamics underscored North American funds halting a 5-month outflow streak, in contrast to Europe's 6th consecutive month of outflows totaling nearly $2 billion. Meanwhile, Asia experienced modest inflows of $47 million. As the year unfolds, the global gold ETF landscape reflects nuanced patterns, with North America and Europe driving cumulative outflows of $14 billion, while Asia stands resilient as the sole region with year-to-date inflows. Market trading activities divulge a 3% month-on-month surge in global gold market volumes, contrasting with a 26% decline in gold ETF trading. COMEX witnessed a 10% rise in volumes for other exchange-traded products, with net long positions increasing by 23% to 658 tons by the end of November. Simultaneously, money manager net long surged by 36% to 449 tons, attesting to investors' optimistic sentiment amid the prevailing gold price rally. Now we'll show you more clips of Mario, but make sure to subscribe to the channel to help us grow and keep us motivated to bring you more financial experts like him. Watch the video to the end and smash the like button like it's a worthless dollar note. Let's get into the video.
Barrels of oil we can get with an ounce of gold. It fluctuates, but over the last 50 years is about 15 to 20. So it's a real measure of value. And also I've got here a sovereign, which is just a quarter of an ounce. That hasn't changed today. It's the fiat currency that changes because they issued too much of it. And if you go back even further to 1971, when Nixon closed the gold window, the dollar's lost 98% of its value versus gold. So that's the way to look at it. Of course, there are people out there who will trade gold for fiat dollar profits, stimulating, we're still running deficits. But about Bitcoin, the FT website, they've got Bitcoin on the top of the page and gold at the bottom. And Bitcoin is 38% below its all-time high, and gold just reached an all-time high. It just goes to show that the mainstream financial press, they don't like gold, and I think they want to push people into Bitcoin because it's digital. And if you if a lot of people wake up to gold and see how nice gold is, how you can hold value, and how private it is, or silver for that matter, they won't go into digital. And with this idea of bringing in CBDCs, you can't have the public going physical, can you? So I think that's the other reason why the Bloombergs and FTs of the world kind of keep gold, on page 17 of the news. I noticed on Friday as well, gold closed at an all-time high, and on the weekend there's very little coverage of it.
Thanks for watching the video till the end. Post in the comments section your price prediction for gold and silver in 2024, and check this video right here because you'll like it. And I see you next time.